Thank you for joining us for this Ankara discussion, What's Next for Venezuela? I want to begin by thanking Fernando Badje, who suggested this meeting. Fernando leads Ankara's Global Strategic Advisory, of which McLarty Associates is proud to be a part of. I'm Lee Feinstein, Ankara Senior Managing Director and President of McLarty Associates. And prior to joining McLarty, I worked on U.S. foreign policy and national security in and outside of government at the Departments of State and Defense, including as U.S. Ambassador to Warsaw. McLarty Associates is now in its 26th year. It pioneered the global strategic advisory space. We are a global firm, Washington headquartered with offices in Brussels and Beijing, and people with expertise and networks wherever our clients operate. We are global in our footprint, global in our mindset, and we look at issues across geographies and sectors. And we'll apply that approach to our work here today to discuss what's next for Venezuela. The Trump administration issued its national security strategy to restore American preeminence in the Western Hemisphere in December. And just a few weeks later, on January 3rd, the administration acted on this policy with the abduction of Nicolas Maduro, replacing him with his then Vice President, Delcy Rodriguez, now Venezuela's acting president. We'll start our conversation today with events above ground, looking at the situation in Venezuela, then an insider perspective on the view from the White House, and then broadening the view to the impact on the broader Latin American and Caribbean region. And then we'll shift to look at issues below the ground, what it will take and how long for Venezuela to return to historic levels of energy production. And finally, we'll assess the size and significance of Venezuela's debts, unpaid for nearly a decade, and discuss approaches on how its debt situation might be addressed. You have bios of each of the participants. I'll introduce them briefly as we go along during the course of the conversation. And for all of you online, we're glad to have a large group. Please submit questions at any time. We'll keep track of them. Look for the Q&A function at the bottom of your screen. We'll address them throughout the hour. Well, let's start with Venezuela and my colleague at McLarty, Gabrielle Trebat. Gabrielle, you're head of McLarty's Latin America practice. You have been monitoring this situation as closely as anyone. What's the situation on the ground right now in Venezuela?
Thank you very much, Steve, for that question. And thanks to all of you that has shown interest in joining our webinar. We're very pleased to be able to have this very important conversation at this time. Yes, since the January 3rd capture of Nicolas Maduro and his wife, we have seen significant changes on the ground in Venezuela. I should say, the operation that captured Maduro followed a months-long pressure campaign by the U.S., including strikes against drug boats, including naval blockades of oil tankers. But notwithstanding his ouster, Maduro's United Socialist Party of Venezuela continues to remain intact, with his Vice President, Delcy Rodriguez, serving as interim president. Important note about who is Delcy. She has been Maduro's vice president since 2018. She also served as Minister of Petroleum. She has served as Minister of Finance. Importantly, she's a very key figure in the Chavismo movement in Venezuela. Her brother, Jorge Rodriguez, is the head of the National Assembly. Obviously, they were, for a long time, Maduro loyalists. Notwithstanding that, though, and this is a very important point, since January 3rd, Delcy Rodriguez has shifted very, very quickly to a very conciliatory and, I would say, pragmatic approach to a cooperation with the United States. Just 2 weeks after the Maduro operation, we saw the passage of the hydrocarbon reform bill to allow foreign countries to exert greater control over oil in Venezuela. We've seen introduction of legislation to give amnesty to political prisoners, which has been another demand of the United States as well as the opposition. And in response, I would say, to some of these pragmatic steps, we have seen the U.S. in turn issue a number of OFAC licenses to allow foreign companies to resume operations in Venezuela. My colleague Jeff Pye will be speaking about that a little later on. So Delcy, I would say, has engaged directly with the United States. We saw U.S. Energy Secretary Chris Wright visit just last week. There have been multiple phone calls and coordination as well with Secretary of State Marco Rubio, with President Trump. President Trump has been pretty consistent in his praise of Delcy Rodriguez and the U.S.-Venezuela relationship, as recently as last Friday, even implying that a visit of his to Venezuela may be in the works, which would certainly be unprecedented. So I would say, as of now, the situation on the ground, it's not necessarily regime change, but I would say regime survival through compliance. The government there, the interim government, is very much trying to manage U.S. pressure, providing concessions on oil shipments, freeing political prisoners. And while, Delcy Rodriguez herself has adopted a very pragmatic approach and clearly has demonstrated interest in greater, I would say, diplomatic cooperation, the truth is she does share power in a very complex arrangement that includes Diosdado Cabello, who is the very influential Minister of Interior, Justice and Peace. He controls the police, as well as Vladimir Padrino, who is the head of the armed forces. And certainly it seems to us that observe Venezuela, while Delcy Rodriguez is consolidating civilian power, economic power, and oil control, the command of the police, the intelligence agencies, it is very much I would say, a shared power structure. So one of the ongoing risks that we're watching in Venezuela is the sustainability of this and potential for increased tension around this arrangement. So again, Delcy Rodriguez has a delicate balancing act, sort of maintaining credibility as well with the Chavista base as responding to the U.S. demands and, of course, just broader international pressure. Washington still has a lot of leverage, must be said, over Venezuela's primary source of income. Obviously, that is oil and use of revenue, not to mention the, I would say, ongoing threat or a possibility of continued or further military action. And internally, of course, the humanitarian crisis as well as economic stability is still an outlying risk for sure in Venezuela that could also, I think, threaten this sort of fragile interim government structure. In addition to all these sort of internal and external pressures, Delcy Rodriguez also, of course, has to recalibrate her ties with long-time allies and U.S. adversaries, China, Russia, Iran, and Cuba. Venezuela is very well known sort of oil for loans arrangements and infrastructure dependency with China, as well as security, energy cooperation from Russia, as well as Iran, and may limit how quickly or how sustainably Caracas can pivot to a stronger alignment with the United States before I would say that checks comes due. The open question here, this is my last point, is the elections. Elections remains another open question. And that will, I think, be a key indicator as regards to the sort of the long-term sustainability of the Venezuelan regime. Delcy Rodriguez has acknowledged that elections are necessary, but she's framed them on conditionalities with regards to sanctions rollback, as well as sort of limitations on international interference. We've heard Secretary Wright's comments last week in Venezuela that perhaps elections could be had, but we're a couple years out, perhaps towards the end of President Trump's term. So it remains to be seen. But from my vantage point, until and unless the opposition in Venezuela is allowed to return to the country, it's going to be very hard to predict a timeline for elections to be held. So that's my report on that, Lee. Back to you.
That's a great report. And in addition to this, there's a summit coming up, right? A South American Leader Summit. Do you expect any major developments? What should we be looking for?
Yes, that's separate. March 7th in Miami, President Trump will convene the South American Leaders Summit. I should say it probably should be more aptly described as a Friends of President Trump that live in Latin America summit. So we'll see the heads of Argentina, Bolivia, El Salvador, Honduras, Ecuador. The focus really on that will be more about China's presence in the region, which of course involves Venezuela, but does not limit it to Venezuela. And in fact, the very country I just mentioned have significant Chinese investment in ports and infrastructure, let alone financing. So this meeting will occur about a month before President Trump's official state visit to China. And I think it's a key priority of the administration beyond Venezuela, but for the region itself.
That's very helpful. Thanks very much, Gabrielle. So we've looked at the situation on the ground in Venezuela, and let's look at the picture from the White House. We're very fortunate to have Director Mick Mulvaney on the call. Mick, you were President Trump's chief of staff during his first administration. What do you think were and are the president's main goals in ousting Maduro?
Yeah, There's two, Lee, and they're somewhat intertwined. The first is oil. It just is. Donald Trump has a fascination with oil production, not just for domestic political reasons. Yes, he cares about the price of the pump in the United States of America, and he understands there's a direct correlation between the price of gasoline and how an incumbent president does in the midterm elections. Right now, the Republicans are probably facing it would be very polite to say is an uphill climb. They're going to get crushed. If the midterms were today, they'd be in bad shape. The Senate is probably in play for the first time, I think, in this cycle. I wouldn't have said that 3 or 4 months ago. The economy has really, the Trump administration has struggled to sort of sell the good news on the economy, and gas prices would be great for them if they come down below $2. And he gets it. There's also, though, a geopolitical aspect to oil production that I think folks overlook, which is that Trump sees the price of oil as linked to Russia's ability to continue the war in Ukraine. Keep in mind, Trump came of age in the 1970s and 80s. He's a child of the Cold War. He remembers how we beat the Soviet Union. We did it economically, and he sees a parallel. Again, history doesn't repeat itself, but it does rhyme. And he figures if he can get oil down to $40 a barrel or something like that, Russians are getting probably 50 cents on the dollar on the black market. They cannot continue to press the war in Ukraine with $20 a barrel for their oil. So there's a bunch of different things that Donald Trump wants that can happen if Venezuelan oil production goes up and goes up dramatically. Every time I talk to folks about this, they ask me a quick question about, well, doesn't Trump realize the impact on domestic American production? Yes, absolutely he does. That American producers won't make money at $40 a barrel. He sees that as a short-term sort of price to pay for the other benefits that he wants. So whenever you ask yourself about Venezuela, look at it through the prism, number one, oil. The second one, which is somewhat connected, is Cuba, which is what this is really all about. That's what this new Monroe Doctrine is all about. It's what the Trump corollary is. They perceive, Marco Rubio, chief among them, as a once-in-a-generation chance to make regime change in Cuba. And I think they intend to do it. It wasn't lost on me. It didn't get a lot of attention in the press that several of the first tankers that we seized, which, by the way, was an extraordinary thing for us to do, was actually oil headed for Cuba. So you have to look at Venezuela through the prism of what's happening in Cuba. Those are the two things that I think that are driving this. And if you ever ask any question about why you see what's happening in Venezuela, ask yourself how it impacts oil and how it impacts Cuba.
Mick, do you see any red lines from the administration's point of view in terms of what the Delcy Rodriguez administration, for lack of a better term, does?
Yeah, what she can and can't do. If she starts increasing oil production, that's good to know. If she starts cuddling up to the Chinese, that's going to be really, really bad for her. I had to laugh when Gabriella used the term conciliatory and pragmatic, because that's exactly right. That's the nice way of saying this. If you're the president of a country because you were the vice president and the previous president got taken out of his bed at night with his wife, you might be a little bit conciliatory and pragmatic because it could happen to you next. And that's exactly how I think Trump sees the world, is that I got rid of the last guy. We'll see if this new person is any better. If she is, that's great. If not, we'll find somebody else. I don't see them, Lee, committing to ground troops in the area. That's just Trump. Trump lives in not fear of that. He just, again, go back to a child of the 70s and so forth. He does not want to be known as the person who gave not only the next Afghanistan, but the next Vietnam. So he's not going to commit ground troops, I don't think, but he could absolutely be militarily active in the region if Rodriguez can't deliver.
And sticking on the political part, what do you see as the political pressure from the Venezuelan diaspora and how the White House thinks about that? Are they comfortable in the situation with, kind of a change of personality, but not a change of regime?
Yeah, it's a really interesting question. It goes back to, the first term we spent a lot of time in Palm Beach, at Mar-a-Lago and so forth, but the president also has a country club at Doral. I had no idea that was, I think, the largest population of Venezuelan expatriates in the country are there. So he was very well attuned into. We spent a lot of time with them. And I think they'd be okay with any regime. Excuse me, I don't want to speak for them, but the impression I got from being in the Trump White House, they'd be okay with anything that made it safe for them to go home. Um, Call it what you want to call it, whatever the name of the government is, whatever the philosophy is, can they go back? And I think that's what's driving a lot of this. And when you've got a president who is conciliatory and pragmatic, I think they probably see this as progress.
And last question for this part. You and I talked about this earlier. Do you have any predictions?
Yeah, I get this one. By the way, I want to take the opportunity to plug a piece of work that McLarty put out because I read it. It's one of the best pieces I've sent since I said Lifehouse. But Kesey, I don't know Kesey's last name. I
Easy
apologize.
McCaig.
Did a piece on Cuba that everybody should read. It was absolutely fantastic. No, my prediction is I made a little bit of news when I predicted that that the regime in Cuba would fall before the war in Ukraine is finished. That's my new prediction market bet. But the next one is that before the end of this term, before the end of the Trump term, you will hear Donald Trump say the words Cuba as the 51st state. You're going to hear that, whether or not it's policy, whether or not it's him just riffing at a press conference, he's going to throw it out there. And that will be a fun conversation to have.
All right. Well, that's a good note to end this part of the conversation on.
Get down to poly markets.
You heard it here
Get your money
first.
down, Lee. Get your money down.
Okay. All right. Well, let's turn to the implications for the region and to Undersecretary Vanessa Rubio, who co-leads our Mexico practice at McLarty. Vanessa, you've had many senior government roles, and among them was as Deputy Foreign Minister of Mexico with responsibility for Mexico's relationship with the countries of Latin America and the Caribbean, of course, including Venezuela. So given that background, can you share your insights from the perspective of someone who is from the region and served in high positions in the region?
Thank you, Lee. It's a pleasure to be in this panel with my colleagues and friends. So, yes, I am Mexican. I know the region very well. I've visited almost every single country in the region, and certainly I visited back in the day when I was Undersecretary of Foreign Affairs in Mexico, Venezuela many times, and I dealt with the Venezuelan government in many occasions. Basically, most of the time to administer many tensions that we had on principles and values, but also on the Mexican community in Venezuela, on Mexican companies operating in Venezuela. Of course, dialogue in relation to international oil markets being two of the one of the most important exporting oil exporting countries in the region, but Mexico also, and of course, delicate security issues. So yes, I know the region and I know Venezuela fairly well. And I think one thing one needs to understand is that the region is quite fragmented. The region is quite diverse. Sometimes the region is very confronted, and today is one of those times where polarization has also caught the region in the middle. And basically, there is a lack of political leadership stemming from the region. The region has had many chances in the past of engaging in more cooperation, in more political dialogue, and in more integration. I remember very well the the free trade area of the Americas, or ALCA, which was an initiative to basically bring together in a free trade zone the whole of the Latin American and Caribbean countries. There was a lot of dialogue. We never ended up in a conclusion, let alone a concrete framework for that to happen. So basically, the region it's either aligned when there's a single or two leaders that come from within, or where there's a specific interest from the U.S. in aligning the region. And I think we're in one of those moments today. After what you mentioned in relation to the national security strategy, I think it's very relevant to understand what it said there regarding the Western Hemisphere. And basically, what it says there regarding the Western Hemisphere is that they want a stable hemisphere. They don't say if they want democratic or undemocratic, or they don't put a name into how the leadership of the different countries is expected to be, but just stable. Then they also say that they want to prevent and discourage mass migration to the US. They want to engage with countries that cooperate against narcos and cartels. And also, the US wants to stop interference, as it's called in that document, from hostile foreign incursion, quote unquote. So basically, this is ownership of key assets, but also supporting the critical supply chains in the world and access to strategic locations, as it is said in the document. So if one understands that, it is very relevant to note that there is a deliberate new leadership and a deliberate new footprint of the US in Latin America. This meeting that Gabriel was touching on is going to be precisely on with some of the leaders of the hemisphere: Argentina, Bolivia, El Salvador, Ecuador, Honduras, that basically align with today's presidency in the US. But there's also other natural leaderships in the hemisphere, the two most important economies, Brazil and Mexico, that have different sayings. So it is very difficult to put everybody in a single bucket and say the way Latin America and the Caribbean think about Venezuela is this way. There's a lot of different points of view, but basically everybody's negotiating in an ad hoc manner with the US, and it's negotiating in an ad hoc manner according to the priorities that the President Trump 2.0 has been putting on the table, which, as I said before, is basically migration, is basically security, and is basically trade. In the case of Mexico, this is even more complex because we, of course, share a huge border and many other historical links that make this a much more complex dialogue and a much more complex table for agreements.
I want to be sure we take advantage of your professional experience in your role as Deputy Foreign Minister working with Delcy Rodriguez. Can you say a little bit about that and what you learned by working with her and how you would assess her style and approach?
Yes, of course. I met Delcy since she was the Secretary of Communications of the government of back then President Chavez. Then at some point in time, she became the Minister of Foreign Affairs, and it's in those two positions that I had many contacts with her, as I had with any officer that was in charge of the relationship with Mexico in all of the topics that I just described. No, the companies operating in Venezuela, but also nationals leaving or visiting Venezuela, oil markets and security issues. So I would say that she is very tough. She's very determined. She is very calculating. She's very sophisticated. She studied in, very well-known schools in Venezuela, but also in Paris and in London. One thing of her CV that I think is worth underlining is the fact that she was head of the Bolivarian National Intelligence Service. That tells a lot of who she is, what she stands for, what her expertise is. She's very loyal, no, very loyal to the cause of El Chavismo and to the cause of Bolivarianism. She's very pragmatic as well, as we have seen. No, she's very ideologic, yes, but at the same time, she has a huge degree of sophistication to be pragmatic enough to do what she's doing today. No, otherwise we couldn't understand that happening. She is extremely radical, no, although I think today that radicalism is very well filtered through this pragmatic lens. But at the same time, it's good that we understand that whenever we speak about principles and values, we might not be understanding the same thing. I was listening to this interview that was done to her over the weekend, and basically the question was to her, one of the questions was if she would deliver free and fair elections in Venezuela. And she didn't doubt to answer. And she said, of course, we have been delivering free and fair elections in Venezuela, and I will still not deliver free and fair elections in Venezuela. The question, of course, was more to new free and fair elections in the coming 3 years, whilst the US administration, the current administration, is still in place.
Thank you, Vanessa. Really great insights and based on your personal experience. We'll do some mixed media now, and we'll turn the floor over to Ambassador Jeff Pyatt. Jeff, you led U.S. energy diplomacy as Assistant Secretary of State for Energy Resources, and you were deeply involved in the effort to leverage the issue of licenses to induce political change and reform in Venezuela. So we look forward in your slide presentation to see how things look now, both above the ground, as we were talking about, and as well below the ground. So over to you, Jeff.
Thanks, Lee. And I'm going to go through the slides very quickly, but it really does help to tell the story that Beck talked about, which is the degree to which, when you're talking about Venezuela, you're talking about oil. If we can look at the first slide in the presentation after the title here, what this highlights is the exceptional dependence of the Venezuelan economy on oil and gas. You're talking about something close to 95% of exports. You compare that to Russia, which stands at 60% oil and gas, even Iran, 80%, Saudi Arabia, 75%. So this truly is an economy that stands on one pillar. Next slide. The point that the next slide makes, next slide. The point that this slide makes is that Venezuela has had for a very long time a world-class resource. This slide goes all the way back 50 years. And what you see there is a very significant oil producer, a country, interestingly, which only really fell off a cliff over the past decade and a half. And even after Chavez came to power, after you had the nationalization and the exit of ExxonMobil and Conoco, production still stayed historically high at about 3 million barrels a day. And if we go to the next slide, please, there's another interesting part of this story. You see that it was only after Maduro's arrival that production really began to hit a steep downturn. And that was well before the sanctions, which the first Trump administration put into place. In fact, what really started to drive Venezuelan production down was the populism of the Maduro regime and its financial incompetence and the credit problems, which led a lot of the oil field services companies to exit, the technical default that Venezuela found itself in. And last slide in this series, next one. So what you saw happen was a very rapid decline in the number of oil rigs that were operating and a corresponding decline in the overall exports. And then the next slide tells the story of the geopolitics, which was an important factor in both the Trump and Biden administration's approach to Venezuela. Because one of the things that happened as companies like Conoco and ExxonMobil were driven out is you began to have an increasing presence of the Chinese. And then what's not shown on this slide is Venezuelan imports of diluent, which is critical to the production of the heavy crude that is found in Venezuela. And from the period of 2020 to 2023, almost all of that diluent was coming from Iran. And this is what led us to the Biden approach, which sought to relax certain specific narrow categories of the first Trump administration sanctions with a view to creating avenues for Western companies to claw back that role. Most important, of course, in this regard was Chevron, whose general license allowed Chevron to export and to produce in its joint venture with PDVSA without transferring immediate payments to the Venezuelan regime. But similarly, specific licenses provided to companies like Repsol, like Eni, often with a humanitarian nexus. That continued, and we'll go to the next slide, please. So that framework, which was laid out in General License 41 in 2022, continued up until 2024, which is when the Biden administration rolled back sanctions. In part, Vanessa talked about the challenge of free elections. And the failure of the Venezuelan regime to accomplish free elections in 2024 led to a rollback of certain sanctions, which the Trump administration then accelerated when it came into office in 2025. So that then brings us up to the story that Lee and Gab started with, which is the removal of Maduro and the emplacement of a new regime. I think what's interesting to me about watching what's happening now is, first and foremost, how the Trump administration has consciously incorporated the lessons of Iraq and of de-Baathification. So you have not seen cleansing of the regime. You haven't seen wholesale removal of the bureaucracy and of the officials who run this sector. There's also this rather unprecedented effort by the US government to try to manage this transition to some degree by remote control. Secretary Wright, as Secretary of Energy, has a role that, as far as I can recall, no US Secretary of Energy in history has ever played. He is sitting on top of the organization, which is going to have to manage Venezuela's oil revenues. He has the background to enable him to go down to Caracas, to sit down with PDVSA and to talk about specific reforms that are necessary to attract in new investment. Everybody saw the headlines out of the White House meeting last month, where President Trump sat down with a number of CEOs to talk about opportunities. And I think as you look at how the next months are likely to unfold, there's a choose your own adventure aspect to this. Every company and every sector has particular qualities. So I think clearly Chevron is in the pole position because they have stayed in Venezuela for the long term. They have the relationships. They have the opportunities to grow their operations. And importantly, after a little bit of delay in January, you now see the Trump administration moving rather quickly on the licenses to reauthorize international and Western companies to be involved in Venezuela. And in particular, I would put a spotlight on GL49 and GL50, which came out just last week on Friday, which give broad authority to Chevron, Eni, Repsol, BP, and Shell. And those companies are all named specifically in the annex to GL50, but also makes it easier for companies to provide services in support of the sector. And I think a big part of the story over the next months is going to be how do the OFS companies, the oil field services companies, come back into Venezuela? How do they get paid? Who, in fact, is their customer? Because if you think back to that slide with all the red bars on it that I started with, Venezuela still has one of the world's most significant proven reserves. It has a world-class asset. What's holding it back for now is terrible management at PDVSA and the political uncertainty. So part of this is how do you navigate the political uncertainty? The geopolitics, just like everything in the energy sector, anywhere in the world where I'm dealing these days, geopolitics looms large. Gab flagged the questions around China, and President Trump has said that he's not averse to China continuing to take some imports of Venezuelan crude oil, but it's very clear from the licensing structure that Treasury, OFAC, has laid out that the intention here is to work with Western companies and to see to it that it's Western companies who are providing the services, who are partnering with PDVSA and are moving ahead. There are also some interesting regional bank shots that I would flag. I think we've talked a little bit, Mick talked about Cuba. I would also talk about my friends in Guyana. One of the big winners from the past month and a half has been President Ali and the government in Guyana, which is sitting on another world-class oil and gas resource, and which now no longer has to fear the risk of a Venezuelan military invasion to claim territory that the Venezuelans have disputed. And then also Trinidad and Tobago, a country which I think, Gab, falls into your category of friends of Donald Trump. The TNT government has worked closely with the Trump administration. I worked very closely when I was in government with Stuart Young, who was TNT's energy minister, because TNT is one of the largest gas exporters in the Americas, but their domestic gas resources are running out. So there's an interesting cooperative plays that can be developed, leveraging Venezuelan gas resources and the production and exporting infrastructure that TNT has. So just to finish up, I think my main takeaway message on all of this would be there are tremendous opportunities. There's also huge uncertainty about how the politics is going to evolve, what the regulatory environment will be, what the CEO of ExxonMobil called a currently uninvestable investment climate, and then also how the Trump administration navigates its partnerships with the other international companies that are going to be so important, because this will not only be American companies. So you've got companies like Eni, Repsol, significant investors here domestically in the United States, but also positioned to be very important partners with the Trump administration to see success in Venezuela as they were with the Biden administration.
Jeff, really appreciate it. Want to let everybody know that they can file questions. We've been receiving them over the course of it, so continue to do that. Jeff, just very briefly, you sometimes talk about midstream opportunities. So can you say a little bit about that as well?
Sure. So Venezuela, because it has such a large resource, there's a lot of machinery that goes into that. So the storage tanks, the handling equipment, the investments that can be made to both work over and sustain production from existing wells, but also to do additional exploration. Importantly, Repsol has already indicated, as I understand it from the news, an intention to explore additional production opportunities. And I've seen the Venezuelan government talking about new blocks that would be made available to both Chevron and Repsol, among others. So this is not just about the super majors, the oil companies that we all talk about. It's about the whole energy ecosystem. And I would include also in that energy ecosystem power. So just as the upstream oil production infrastructure has been deteriorated, things like transformers and transmission and the infrastructure that keeps the lights on in Caracas, that's also infrastructure that supports the oil industry. So this is really, when I talked about the unprecedented character of what we're trying to accomplish here, Lee, you and I are old enough to remember Iraq and what it felt like when General Petraeus was trying to resuscitate the Iraqi oil and energy economy. We're trying to do the same thing over again, but without the coalition authority, without the giant US footprint. And so the role of private companies becomes particularly important.
It's really helpful. We've talked about the Trump corollary to the Monroe Doctrine. We may have another corollary to the Powell Doctrine, which was, if you broke it, it's yours. This sort of remote control approach to post-military intervention. Spencer Jones, really looking forward to your presentation. Spencer, you're our colleague at Ankura Sovereign Advisors. You've long advised sovereigns on or their creditors on sovereign debt restructuring. So let's start with the big picture. Venezuela hasn't paid on its debts since 2017. Can you put the size and the circumstances of Venezuela's debt into a global perspective?
Thank you, Lee. So Venezuela's public debt is today estimated at around $160 to $170 billion, around 60% of which is owed to international investors in the form of dollar bonds issued by the Republic and PDVSA, the national oil company. Those bonds being in default since 2017 and therefore have accumulated significant interest arrears. With the exception of a small amount of debt owed to multilateral institutions such as the World Bank and the IADB, all of these claims will need to be restructured. That will make it one of the largest sovereign debt restructurings of modern times. Only Greece's restructuring in 2012 at around $300 billion of claims is notably larger. The Iraq debt restructuring, going back to Iraq as another precedent in the context of debt here potentially, at around $130 billion, and the Russian restructurings of the 1990s and early 2000s at a little more than 100 billion are the next most significant. Even the Latin American debt crises of the 1980s and Argentina's more recent restructurings in 2005 and 2020 were somewhat smaller. And another way of putting the debt in perspective is that the IMF estimates Venezuela's public debt at around 180% of GDP. And that is before taking into account judgments and arbitral awards, which are significant. That's one of the highest debt ratios in the world, probably in the top 5, maybe even in the top 3 globally. So by either definition, the debt is substantial and the restructuring will be one of the largest sovereign debt restructurings ever undertaken. One final point on this is that it's interesting that in these larger and more complex sovereign debt restructurings, there can be wider impacts. We saw that in Greece in 2012 in terms of how the consequences politically and economically in Europe. And we saw that with the August 1998 Russian default had a big impact on global financial markets through unintended, unforeseen linkages. In the case of Venezuela, there's clearly no surprise. The debt's been in default for 7 years. But how the debt issue plays out, how it's addressed, how long it takes, will it enable investment in the oil and gas sector, or will it frustrate investment in the oil and gas sector? Could have a material impact on global oil prices.
We talked about this earlier. I had forgotten about the global impact on the Russian debt. It's a very, very good point to keep in mind. Can you just give a sense now from the Venezuela perspective? Why does it matter to them that they have to address this issue? How much of a priority should it be? They've, delayed the debt for as long as they have. So, can you say a little bit more about that?
Sure. I think you first need to recognize that Venezuela has suffered one of the most severe economic contractions in modern history, with GDP estimated at 70 to 80% below its 2012 peak. And this has triggered a huge humanitarian crisis, mass emigration, bouts of hyperinflation. So Venezuela desperately needs economic stability and the new investment, not just in oil and gas, to fund recovery and transformation. Given the size of the debt overhang, the fact that it is in default, and the very poor economic picture, you're not really going to see a restoration of macroeconomic stability without a resolution to the debt problem. Without that kind of resolution, there can be no clarity as to Venezuela's near-term or medium-term economic prospects. And in these circumstances, it's very difficult for international companies to make decisions about significant investments in Venezuela, both generally and in the oil and gas sector, I would suggest. Without addressing the debt problem, there's also no access to the international capital markets for Venezuela. And without seeking or starting the process, there's no new funding from the multilateral institutions such as the IMF, the World Bank, the IADB, which are traditionally the first sources of lending for a country that's emerging out of crisis. So none of the funding needed to rebuild the economy will be available without addressing the debt problem. I think there's another point to note, which is without debt restructuring that facilitates economic stability and recovery, it's also difficult to see a restoration of political stability over the medium term, given the depth of economic collapse over the past decade. And that again plays into the issue of new investment. So this would suggest that Venezuela needs to address its debt problem as a priority and just simply can't afford to wait.
Much appreciated. And Spencer, we'll come back to you about sort of some of the options for Venezuela in a moment. I just want to get to one or two questions from, with apologies for any mispronunciation of names, for Carolina Echeverri, probably a question for Vanessa, but maybe also for Gabrielle. What's the impact on Colombia as a border state, and given the relationship of its president to the United States?
I'm happy to take a first cut at that too, and I could see also we have some two prior questions as well, Lee, that are a little bit older, maybe want to queue up as well. But for Colombia, obviously, the U.S.-Colombian relationship has been strained. I think it turned a positive corner last week with President Petro's visit. Of course, we have elections coming up in Colombia. So I don't think we'll see we don't get a real sense of that until after the elections and perhaps the return of a more center-right regime in Colombia. But with regard to Venezuela, I would say it's in the region, it's in the entire hemisphere's interest that Venezuela return to a politically stable, economically prosperous country. Let's not forget that 25% of Venezuelans live outside their borders. Colombia took a vast chunk of those migrants, as did other bordering countries. So I think no matter where, I would say someone like a Petrosat with regards to the Maduro operation, I think there is strong support in the region to returning Venezuela to an economically viable state.
Thanks, Gabrielle. Vanessa, anything to add?
Maybe just adding the human dimension, which is migration, no? Almost 3 million Venezuelans living in Colombia as part of the crisis in their neighboring country. So I think that is going to be playing out in the future in relation to what happens with Venezuela and its possible stabilization. But also very importantly, as Gab noted, the election. You have elections this year in Colombia, in Peru, in Brazil. There was also an election in Costa Rica. The new government took oath in Honduras. So there's been a lot of changes, political changes in the region. And I think also the US government is waiting to interact with the new heads of state and the new government to follow through.
Thank you very much, both. Maybe a question for Mick and possibly Spencer or others. It's the first question by Chantal Agarwal on the level of interest on the part of private business in Venezuela, given that this administration, well, less than 3 years, is that the administration has only 3 years left, that the midterms are intervening, and that the president might lose interest. You're muted, Mick.
Sorry about that. Jeff's points about the comparisons to Iraq were interesting in that there's going to be a bigger role here for private industry because we don't have the American military on the ground. But that means you have to be able to allow them to invest and succeed. And right now they're not there. Listen, I got to tell you, I don't think the Trump administration was very pleased with the results of that big oil meeting they had at the White House a month or so ago. Where I think it was ExxonMobil said the country is uninvestable. That's going to be a problem they have to fix. I come back to what Spencer said about straightening out the debt situation. I think they have to do that because right now, maybe wildcatters are going, maybe the really, really aggressive sort of small operators, but I don't think you're going to see a major move by not only the oil producers, but by all of the intermediary support industries because Trump told them they were going to get support. And then the next day, the White House came out and said, let's make it clear the support does not include the American military. So I think that's a giant question mark right now. The Trump administration knows what they want. I don't think they're entirely settled yet on how to get there. They want the oil. They know they don't want to use the military, so they're still trying to figure out how to get what they want.
Thanks, Mick. And Spencer, maybe this is a good opportunity to sort of talk a little bit about how what some possible approaches are to, resolving the debt issue.
I think this is where it potentially gets very interesting. If Venezuela were to look at the debt as a priority, there are some key issues around any deals that are struck with creditors being legally legitimate and financially compliant with a future IMF program. What do I mean by that? Legally legitimate means that any deal that binds future governments in Venezuela and can't be undone. For example, by a new government post an election saying it doesn't recognize the agreement because the last administration lacked the legal authority to conclude restructuring agreements. Clearly, given the political situation, that's clearly an issue today. Financially compliant with an IMF program, what do I mean by that? In almost all cases where a sovereign needs to restructure its debts, a first step is to negotiate a program with the IMF, which brings a combination of funding on a conditional and tranched basis, funding from other IFIs, technical advice, and an independent and credible oversight of a government's economic reform program. And an integral part of an IMF program in debt restructuring cases is the IMF's debt sustainability analysis, which, without going into technical details, serves as an independent and credible analytical anchor for the debt relief ask. And debt restructurings must be consistent with the debt targets set by the IMF under its DSA. For example, debt to GDP must be below 90% in 5 years' time. And if debt restructuring agreements aren't consistent, they have to be renegotiated and unwound. And I think this raises one further issue, which is potentially very interesting in the case of Venezuela, because it means that Venezuela may need to take a non-orthodox, unprecedented approach to how it restructures its debt. Because of the way the IMF works and the need for financing assurances from official creditors, government creditors, to secure board approval of an IMF program, government creditors tend to go first, with private sector creditors, bondholders, banks, trade creditors, others following suit. And the official sector creditors then take a view as to whether the private sector deal is comparable with the debt relief that they have granted. And they effectively have a veto, therefore, over the deals that bondholders or other private creditors strike. And in recent cases, Zambia and currently Ethiopia, we've seen the official sector say no, that those private sector deals weren't comparable, leading to protracted delays and a very slow process. In Venezuela, bondholders hold around 100 billion worth of the claims outstanding. Official creditors, about 25 billion. The big official creditors are China and Russia. It's difficult to see either the international bondholder community or perhaps more importantly, the US administration. Gabriel referred earlier on to its national security strategy being American preeminence in the Western Hemisphere. It's very difficult, therefore, to see the US administration and bondholders conceding this veto power or leverage to China and Russia, given the risk of holding up a debt restructuring, preventing or slowing down investment in the oil and gas sector. So we may well see a non-standard approach, potentially even with the IMF not playing a central role, which would be almost completely unprecedented.
Super interesting and really interesting geoeconomic point. Just back to Mick's quote from Darren Woods, if we look at the commercial constructs and frameworks in place today in Venezuela, today it's uninvestable. And that brings me to a couple of questions for Jeff. From Doug Fisher, Jeff, with international oil companies coming back into Venezuela, how much in new capital projects do you see happening as compared to operating existing assets?
A really good question, Lee. And I would start by emphasizing something that I don't think gets all the attention it deserves, which is the historic symbiotic relationship between the United States and Venezuela. The alienation of the relationship between our countries and our companies is very unnatural, because historically, and if you go back to the late 90s, when Venezuela was at 3.5 million barrels a day of oil, most of that crude oil was going to the U.S. Gulf Coast. And in fact, the U.S. Gulf Coast refineries are optimized for handling the heavy sour crude that Venezuela produces. And fun fact, I remember talking to an international oil company CEO who was describing to me how his deliveries of Venezuelan bitumen, asphalt, were coming to Baltimore, who as somebody who has to navigate around the huge potholes that surround Washington, D.C. this time of year. I want to see more Venezuelan bitumen coming to the U.S. East Coast. So there's a natural opportunity there. I think it's inevitable that the most early movement is going to happen with the oil field services companies. And if you remember that that graph I put up where about a decade ago Venezuelan production fell off a cliff, that was because a lot of the companies exited. And so the prospect of companies like Baker Hughes and Halliburton and SLB coming back in a significant way with their partner upstream American and Western companies has quite a bit to recommend it. Growing production, new capital investment is a different challenge, and you've seen the estimates in the press: hundreds of billions, $100 billion to $180 billion of new capital required to get Venezuelan production back where it used to be. That's a huge sum of money. And one thing about the international oil market that's different today compared to where it was when Venezuela was at peak production. The United States today is doing 13.5 million barrels a day of oil production, the largest producer in the world. Overall, global oil demand is starting to decline. China is the most prominent example of that. So the investment equation for a company looking at opportunities in Venezuela has to weigh that against opportunities domestically in the United States, opportunities next door in Guyana, or for that matter, opportunities in the Gulf. So I think this is, again, I come back to my point about choose your own adventure. And I think a lot is going to depend, again, on the process of political reform in Venezuela. And the other point I would emphasize, and this connects a little bit to what Mick was talking about, the oil and gas sector and the energy and mineral issues extractive issues that I work on are fairly distinctive in that it takes $1 billion to do anything, and your ROI is measured oftentimes in decades. So companies have to invest not with a view to 3 years remaining of the Trump administration, but to where the market's going to be 5 years from now. And the sine qua non is a degree of certainty and predictability about the above ground situation in Venezuela.
Jeff, if I may, Lee, real quickly.
Please, Mick.
Just to chime in on the on sort of the horizon, the 3-year horizon. Is that what you're looking at here? Keep in mind, there are very, very few things that are bipartisan right now in Washington, D.C. Antipathy towards China is one of them. People forget we're only, 18 months removed from the TikTok ban that passed on a bipartisan basis. And as critical as one party might be of another during any particular administration, for example, Democrats were very, very critical of Trump's tariffs on China in the first Trump administration, but left many of them on during the Biden administration because it was China. I don't think, because of that concern about Chinese influence in the Western Hemisphere, I don't see a dramatic change of this. Certainly not because of the midterms, even if the Democrats do take the House, which I do expect, even if they did take the Senate. But even the next Democrat president, I can't see a dramatic change here, like I might in other areas of geopolitics.
That's a really good point, and one I was going to ask. And Jeff, I think you also addressed in your earlier response a question that Tomas Mondal had. There's one more question before we end, perhaps for Gabrielle or perhaps for Vanessa, from Carlson Walden, and maybe a good way to sort of think about wrapping this up, which is from the perspective of daily life in Venezuela. The question is, any idea as to how long it could take to revitalize the economy in such a way that it will significantly impact daily life for the people of Venezuela?
Yeah.
Maybe I'll just make a quick comment here. One thing that I think in terms of order of magnitude, the economy of Venezuela today is 4.5 times smaller than in 2012. So this has taken a huge toll in the population in relation to extreme poverty, lack of access of opportunity, but also day-to-day democratic life, day-to-day freedom for everybody. So I think the future for Venezuela, for the people of Venezuela, will largely depend on a legitimate government. So this passes through free and fair elections, new functional institutions, a new social contract that brings again trust, not only on the government, but on the whole of the society in Venezuela. And then again, gaining the route to economic growth and to, of course, increase prosperity and opportunities for all.
Thank you, Vanessa. Gabrielle?
I can jump in here. Yes. I just wanted to mention too, it's only been 6 weeks since January 3rd. And we've had we've seen sea changes and very fast changes right now. I think a lot more needs to be done and a lot could happen over the next 3 years. I will say, I'll make one note, I think is always a good indicator of things to come. There was a poll put out by Mark Firestein's firm over the weekend. He was Obama's Latin America advisor, that said that 72% of the youth in Venezuela are feeling much more optimistic about the direction of their country since the Maduro operation than they were previously. And we saw that this past weekend with student protests in Venezuela. They're of course clamoring for the amnesty bill and the release of the remaining about 700 or so political prisoners. So I think that is I would say a signal, at least, that there is some growing enthusiasm among the youth, which I think is important. That said, we still have a long way to go, right? It's only been 6 weeks, but we have a lot more to do. And kind of tying into the question about sort of investment incentives and sort of what security do companies have, I think we need to see a lot more, right? The issues of physical security that were alluded to, that is still a problem throughout the country. The armed civilian militias called colectivos, that impacts business. It impacts just public safety issues. Venezuela still needs to return to traditional investor state, investor dispute mechanisms such as ICSID and UNCITRAL. The hydrocarbons bill has allowed that and recognized that for oil and gas, but broadly, we need to see a return of Venezuela to some of those regimes. And I think what we're going to need to see too, and perhaps we'll see this over the next couple of years on the Trump administration, but even a U.S.-Venezuela trade agreement or some nascent kind of agreement that involves some protections for U.S. companies to be able to go in there.
That is a great point, or very important points on which to end. And whatever one thinks about the national security strategy and how it was phrased, one issue that it does address in its way and with actions in their way is sort of a reversal of decades of neglect, if you could put it that way, from the United States towards the hemisphere. Not everywhere, of course, but more broadly. So that's sort of perhaps something to end on. I want to just thank all of our panelists for a terrific set of remarks and thank all of our audience for their excellent comments. We'll be following up to you with an email, and we also want to encourage you to be in touch with us directly if we can answer any of your questions.